So chaps, getting a high ROI requires a strong investment strategy. This is my personal result, 85.6% in about a 1 year time. This is how my investment portfolio appreciated. However, this is a result based on my personal experience, and because I had this very best experience, I want to give you the very best blueprint for a strategy that can possibly inspire your own investment journey. However, you need to consider your personal circumstances to be able to achieve these results. What I recommend is a so-called dual approach. So you basically leverage high return stocks, but you also leverage dividend buys. Why do I recommend this particular strategy? This video is not sponsored by Trading 212. However, when I started my investment game with Trading 212, I leveraged an affiliate link that gave me a free credit that was already invested in a particular high growth stock. You guys make sure you check this space in the description below where you can find an affiliate link that will take you to Trading 212. I will make sure the space beneath this video stays updated. With a high risk often comes a higher reward, but you need to be careful when choosing the right stocks. So at the minute, the high return stocks are normally the tech-based ones and AI-based ones. So you need to do your own risk evaluation. Do you believe in a particular company? Do you believe that a particular company has a long-term potential? Because ultimately, chaps, investing is a long-term game. My favorite platform for investing is Trading 212. The reason it's my favorite platform is that they have zero to low commission fees, and ultimately you want to have the flexibility as an investor if you feel like you need to pull your money out. So why I love Trading 212 is that it gives you enough flexibility as an investor to move your funds around to different stocks, to different buys, etc. You get loads of flexibility without having to worry about high commissions. And this is why personally Trading 212 is my winner platform for investing. High return stocks. What do you need to know about high return stocks? So we've been already talking about high risk, high reward. You have to be careful choosing the right one. So at the minute, my most favorite personal ones are, we got Nvidia, because they're a leader in AI chip manufacturing. They got a big market. And the best thing about Nvidia is that a diversified company. So they started as a tech company, but they heavily invest in AI. So in case, the AI development changes, they also already got the infrastructure in place that's still gonna drive the company growth as well. So look back into Nvidia's history. So if you held any Nvidia stocks back in 2000s, maybe a couple $1,000s, etc., now your portfolio value may be as significant as a couple $100,000s. That's how significantly Nvidia stock appreciated. So then we got the ASML. ASML is a Dutch-based company, specializes in creating high-level AI chip-making machines, and loads of chip makers actually rely on ASML equipment. So you might not have heard of this company. ASML is the potential king in the AI industry. So this ASML portfolio, so this is where I experienced the strongest growth. So I remember roughly a year ago, the ASML stock was valued at around $654. Today, the same stock price hits around $1,560. So you can see the high growth in here. So you were very lucky if you were investing in ASML during its momentum about a year ago. However, there is a still potential growth at this company because orders are in place, obviously. However, there is a strong growth projected for the rest of the year for ASML. So again, you need to make your own research to see what works best for you. Now, let's talk about dividend buys. So this is basically your high return stock strategy. So you can invest heavily in tech stocks and AI. But what's also great about investment is that as you get to own more and more digital assets, it's smart to benefit from recurring dividend payments. And now we are going to be talking about the dividend strategy and what I find to be the most efficient way for you to sort of structure this in your investment portfolio. So as you know, when you sign up to Trading 212, you got an option to build an investment pie. Investment pie is basically where your wealth is concentrated proportionally across a wide range of companies. So for instance, you can have a Coca-Cola stock of, let's say, 15% in this pie, okay? So you got Coca-Cola stock at 15%, then you got, I don't know, then maybe you also invest in Pepsi Cola, maybe you hold a 12% in Pepsi, okay? 12%. And basically, what happens with these pies, you ultimately want to choose companies that provide higher dividend payments. And one of these popular companies that provide higher dividend payments historically is Pepsi and also Coca-Cola. You want to think of other companies, and if you are asking yourself, okay, where can I find inspiration when it comes to, okay, what company in order to maximize my dividend income? Look at different pies, look at different creators, there are people on Trading 212 because actually it also functions as a social media platform. So there are investors out there who made their pies public. So you can look at successful investment pies. And the best thing about sort of having this approach is that you can copy and paste this pie into your own portfolio, or you can create your own pie inspired by that pie with your own sort of set of companies. So I believe this is a very efficient strategy. You also get to see a performance of these pies on a yearly or potentially maximum basis. It is also important to note that these results are not typical. I've seen this success purely because I chose the right stocks at the right time. When you are buying a stock, you need to think about investing as a long-term game. And ultimately, the best time to buy stocks is often when they climb down. But you need to be reassured that the company has a potential and that there is going to be a return on investment in the long run if the company performs well. So, another thing to note with this sort of portfolio strategy is that with these individual stocks, you have enough control how much of a particular stock you own. However, with the pies, you can also set up rebalancing. So if you feel like your wealth is not proportionally balanced, you can set rebalancing settings with the pies. But I still like the idea of choosing my own stocks. And the best thing is, for you guys who are quite new to investing, if Trading 212, you don't need to particularly purchase, one share of stock. The best thing about Trading 212 is that it actually allows you to purchase a fraction of a particular stock, which means you don't have to spend entire price per one share per stock. So for instance, Nvidia at the moment, or let's take Apple for example, at the minute it's been valued around $300 per one share. So what it means to you, let's say you want to invest roughly maybe £50 or £20, and you can do that. So you can set your budget, you can set the amount you want to invest. And once you do that, what basically happens in Trading 212, you set how much you want to spend as a maximum on a particular stock. And for instance, if that's a lower amount of money, you are likely to end up with a fraction of shares, which is a great way for your investment strategy because obviously you can set up recurring investments, and as you keep investing in those particular stocks, you'll end up owning more and more shares in the company. And this is where the dividend payments factor in. So basically, when you own a particular share or amount of shares, the companies tend to pay based on a share, and occasionally certain companies also pay you for a fraction of shares. So these are the important things to consider. So at the minute, I'm trying to sort of look into how I can improve my portfolio investment strategy regards the dividend pie. So you guys, make sure you subscribe to this channel. There's going to be loads of content on growth, personal investment, and beyond. because I love this sort of journey, so I thought I would share it with you guys. I hope you benefited from this video, learned something new. Please let me know what are your current investments, challenges, strategies. Are you new to investing? Do you want to learn more about this app? Let me know in the comments below. I would appreciate you hitting a like button and subscribing to this channel, and I will ultimately see you in my next one. This video became easier to create thanks to Drawboard, a high quality British based company who specialize in making these boards. The best feature of their boards is actually they do not leave any ghost marks. So you can see as I clean any of my content on this board, it doesn't leave any stains or smudges. This is exactly why I love this product. Plus the entire product is magnetic for ease of use. You guys, I hope you enjoyed this video. Please make sure you share your feedback below. Also make sure you check my website. You can potentially subscribe to my email newsletter to stay updated. I'm looking forward to seeing you in my next one.